CNBC TV 18 presents the AI Dialogues in association with IBM.
Hello and welcome to CNBC TV 18 presents the AI Dialogues in association with IBM. I'm Ridu Bhandari. In the ever-evolving landscape of finance, artificial intelligence has emerged as a game changer, fundamentally transforming how banks and financial institutions operate, manage risks, and deliver services. According to a recent report by McKinsey, AI has the potential to deliver up to $1 trillion in annual value for global banks, mainly through efficiencies in areas like credit underwriting, risk management, and customer service. The question is no longer if, but how institutions will integrate AI effectively while balancing innovation, cost optimization, and regulatory compliance. So today we have an outstanding panel of leaders here with us who are at the forefront of this transformation. Let me welcome my guests tonight, Venkatraman Venkateshwaran, CFO of Federal Bank, Vishwanath Ramaswamy, Vice President and Technology Leader at IBM, Ravindra Nahar, CFO of HDFC Securities, and Gobind Jain, CFO of IndusInd Bank. Welcome, gentlemen. Thank you so much for joining us here today on the AI Dialogues. We're talking about how AI is transforming banking and financial institutions, particularly as far as your operations are concerned. So, Venkat, if I can come to you first, give us a sense of the goal setting that you're doing for transforming your operations and some of the early use cases that you're exploring right now.
Federal Bank has always been at the forefront of adopting technology and adapting quickly to changing technology as well. And the latest initiative of Federal Bank was the launch of Smile Pay, which we did a few weeks back, which is based on Smile face recognition. In terms of adoption of AI and initiatives, we follow a very calibrated approach. We want to make sure that we do the proof of concept before we get big into anything. So right now, we are doing the pilot in three different areas. The first one is on credit assessment, credit underwriting as well. In that, basically, we have financial statements of listed entities, which is available in public forum. Currently, it's done by a group of people who pour through the financial statements, do the analysis, ratios, and then come up with a summary. So we're using technology, AI, to do that and give us a page of summarizing what we need and also the exceptions. What usually takes 2 days is now done in 15-20 minutes. That's number one. Second area where we are doing the proof of concept is policy documents. Large number of policies which banks have, which runs into several hundreds of pages, each policy. And when we are presenting to the board for review or annual refresh, there isn't time for anyone to read the entire set of documents. So we're using AI to kind of summarize and give an executive summary in say 3 or 4 pages of the entire policy document, highlighting the changes, if any, which has happened from the past. And the third area where we are doing this is in transaction monitoring and fraud prevention in the compliance side. Transaction monitoring, again, is something which is an important area for banks and hugely data driven and time specific as well. So that is one area. And fraud prevention, trying to address or reduce the number of false positives. So these are some of the initiatives which are currently underway in the bank.
Gobind, if I can come to you next. A lot of data is being generated on a daily basis, copious amounts of data that all banks are dealing with. What's the biggest challenge in kind of ensuring that this data is structured properly and is useful for any AI-powered tool? Secondly, where all are you helping reduce costs when it comes to optimization of your operational efficiencies? Which are some of the key areas that banks can utilize AI into, particularly to reduce costs?
So these technologies can process a large amount of data with lesser time and more efficiency, provided you are able to write the right kind of algorithms. So these technology, once you deploy on that, they can process through both structured and unstructured data and create an outcome for you, which otherwise humanly it's not possible to gain an insight. The only few challenges come, and one is that a lot of customer information you'll have to make available to these tools, and somewhere maybe you'll have to take enough preventive action so that data is not leaked out and the customer data privacy is maintained for the customer. Another thing is operations is always the backbone in a bank. So most of the things are done at the operation level. Even finance function uses the outcome of the operation. So it is the operations which handles the large chunk of transactions. So all kind of repetitive transactions which are handled by operation can be automated through AI. So where you can not only enhance the customer experience, but at the same time you can provide speed and efficiency and accuracy. There are other areas where you can use this technology in your document processing, like you can automate your legal documents, so standardize them, and once a particular type of customer comes or product comes, you have a standard template. Similarly, audit tools, you can very easily deploy the state of art audit tools to do the audit not only online, while at the same time transactions are happening. You can deploy this technology to see are there any aberration in the data. You can check any unauthorized logins. So you can put lot of means automation through these kind of technology. The only thing is that yes, it has to learn from your data.
Ravindra, cloud is a critical enabler of AI as far as operations are concerned. At HDFC Securities, give us a sense of how you are leveraging cloud technology in particular to ensure there is dynamic scalability, there is flexibility in terms of operations. What has the impact of cloud been, particularly on operational flexibility and cost efficiency as well?
So, being from stock broking industry where the number of transactions fluctuate depending on the various events and incidents, so we have to be ready with very flexible structure where we can increase our capacity as and when required, because for us the speed of transaction is very critical, because any delay in transaction can have impact on the transaction of clients. So it is critical for us to be ready with flexible capabilities where the cloud structure is quite helpful. Still, as of now, we are into evaluation phase and some of the applications that we are trying to move on cloud. But yes, I believe cloud can help a lot in this area.
Vishy, coming to you now, CFOs, of course, need a very clear understanding of how high impact projects will tap into their resources, whether it's human resources, whether it's monetary resources, whether it's your technical resources and investments. Now, at IBM, how are you helping financial institutions and the banking sector in particular in optimizing their AI deployments? Give us a few examples of what your customers are up to, and what are some of the early success stories that are coming out?
Yeah, thanks for having me here, Mridu, and a pleasure to have the esteemed people out here in the panel. A couple of things, Mridu. One is, let me start off, step back and give you a prologue in terms of, we did a recent study of a lot of financial institutions, especially the CFOs. And I would say we identified about 6 power moves, if I were to say, with the CFOs, right? The first one, I would say, is how can the finance organization become a compatriot to the technology, the CIO or the CXO in the technology side, right? So it's no more separate domains. They're kind of more or less getting into an overlapping zone of how finance CFOs become a technical alliance to the CIO and vice versa, right? So it's going beyond the domain expertise, right? So that's one big power move. What it really helps is in terms of looking at new areas where finance would like to see how the business grows. Because the end of the day, the fundamental driver for any bank or any institution for that matter is business growth at the right profitability, right? And of course, not compromising on the consumer or the client experience, and at the same time enhancing productivity. The second one is, of course, being that show me the ROI, right? As a CFO, that's the immediate reaction, right? Okay, this great technology does a lot of things, show me the ROI, right? That's the second power move, if I were to really say. Does it enrich the consumer or the client experience, or does it enrich productivity of my people down there? Am I able to put them in the high skill? So immediately what comes is ROI. The third piece is actually putting the execution, like I would put the yin-yang story out here. Like execution is the yin of the strategy's yang. Testing waters in some places right now, wetting feet, but can we accelerate this at scale, right? Yeah. That's where execution at scale comes into play. Fortunately, we are in land which is a growth country and with a scale of our size, you can't have a better test than that, right? So the execution is the third power move. The fourth is, of course, regulations. Being the banking and the securities and stockbroking, and for the matter, even insurance, right? Highly regulated industry. So you have guardrails around that. How do you manage the risk and compliance by adopting these technologies? Because that's very, very critical. So that is something which comes in. I would say AI, data is the AI's oxygen. And last but not the least is, of course, you have talent, right? So, and investing in talent, especially in the finance domain, that while the domain knowledge is important, the financial knowledge and the talent is important, but there needs to be a layer of technology inbuilt into it or embedded, right? Because I would say AI is kind of what Netscape did to browsers, is what AI is doing today. So you need to have the domain expertise of the financial background, but also the AI, right? So we are helping clients across each one of these areas, right? Be it in terms of call center optimization, be it in terms of document summarization, be it in terms of summarizing, say, balance sheets and records, be it doing sentiment analysis of client experience, of just using a mobile app of a bank, and so on and so forth. So there are numerous examples. And it can go at scale as well. So that's just to give you a perspective of some of the areas around these 6 pivots, if I were to really put that across.
Venkat, if I can come to you with that. Now, of course, AI is becoming more and more critical to financial planning, to our operations. How do you then, in a regulated entity like a bank, balance innovation with regulation and compliance?
We can try various things, but at the end of the day, as long as we are compliant and addressing the risk or having the risk mitigants in place, I think we should be, and we are trying it out in several areas. For example, we have recently signed an MOU with RBIH, which is the Reserve Bank Innovation Hub. There's a tool called Bashini, which is multilingual capabilities being integrated with our chatbot, Fedi. So Fedi can now, it's called Fedi. Oh. That's the AI chatbot of Federal Bank.
Interesting.
So that's been integrated and we are going to try it out. So we have to try these experiments, but like I said earlier, we need to be cognizant of making sure that we're compliant. Data privacy is another big thing which is coming into play. Customer data has to be, protected. Another way of looking at it is there are certain tools which are already existing in organizations prior to AI. Now, robotic process automation is something which many banks and institutions already have been using. Like we use it extensively for our reconciliations. How do I overlay AI on top of it to make sure that we have the accuracy and also we draw insights from it? So where AI helps is also what additional benefit we can get out of it. There was a discussion earlier about ROI. The ROI has to be looked at it from a business outcome perspective. If I'm just going to look at how many AI models I used or how much data I processed, there's no point. It doesn't give any business ROI. What I need to then do is, okay, what is the benefit which is there to the customer? Is it a better experience? Is it a faster experience? Are we getting better insights which the frontline can use to take decisions? So one needs to look at it from that perspective as well. Very recently, the regulator also spelled out the need for cybersecurity and enough controls when we are using the AI tool. So it is of paramount importance, and whatever we do in such a way that we are compliant with the regulatory requirements. And banks being an institution where we deal with people's money and customer data, huge data flows through banks. So the responsibility is with us to make sure that we balance that with the adoption of new technologies.
Well, I also want to touch upon how banks are balancing this AI-driven personalization with the human touch, because eventually you are dealing with people's money. When we are talking especially high net worth individuals, you're talking huge amounts of wealth that they are putting in your banks. People who have complex portfolios, they still tend to trust humans more than they trust machines. So how do you then balance that human touch? What is it that you outsourced to AI, and what are the areas of operations that will clearly remain with humans for the foreseeable future?
So what I'll say, the biggest advantage of AI is that it can process a lot of data in a very short period of time. So it's your ability how much information you have available and you have extracted, which you can be used by your AI to process that information. So look at a case of a wealth customer. So once you have, or behaviorally you have studied how, where he's investing, where he's spending money, what kind of investments are there. So you can use that information two way. One, to bring user experience for that customer. You can keep on updating. So imagine a case when you log in, a customer logs in and system gives you information. Here you spend money, these are your investments, these are your returns, and supported by voice command. I want to know what is my 1 month return. I just tell the system, okay, give me my 1 month return, and it's within a second it's available on screen. So everybody will be happy with that kind of experience. So it's the experience you kind of bring. On the other side, when from a manufacturing side, I also know where the largest transactions are happening. So I can also negotiate with the manufacturer to get a better deal for me and a better deal for the customer.
Right. So, Vishy, while of course models do that learning, what are some of the risks when it comes to this multimodal AI being implemented? And now we are talking generative AI as well. What are some of the inherent risks when it comes to implementing some of these models that banks should watch out for, and how should they navigate this piece?
As we are stepping into use cases, the fundamental of AI is there's no one model which fits all. That's very, very clear, right? So it's not that a model A may work for bank A, but the same model A may not work for bank B because the data sources are different. And then further, model A could be used for a use case 1, but the same model will not be relevant, will not give the quantified and measurable outcome to the point what Venkat made for a use case 2. So you need a model B. And it just grows, it just sprawls. Just the way we have seen the sprawl of applications in the banking industry over a period of time. It started off with core banking and then mobile, internet, and fintech starting to adopt, building the ecosystem. So it just kept sprawling like tentacles, right? The tentacles was just spreading. Same way AI is going to go through the same thing. And it becomes most important piece is, I would say, the governance of this whole thing, right? Because when we go back to a highly regulated industry, regulated or non-regulated, doesn't matter. But when you go back to an industry, fundamentally, you're looking at 5 things. And I would say the 5 fingers of a hand from a risk standpoint. One is you're looking at explainability of the AI, right? If I inputted X, are you able to explain that if a Y inputted, will I get the same answer or a different answer? Are you able to explain the AI model and the data pipeline, both? So explainability becomes a very big challenge. The second is the robustness of the AI model itself, right? With a multimodal kind of use case, multimodal kind of an environment, robustness becomes big, and especially in our environment where we are living in, is because of the scale, right? So the model should be able to be as robust as it can. The third one is most important is the fairness, right? Is the model not biased, right? Because more often than not, if X applies for a personal loan in a bank or an auto loan or a home loan, right? And there is an AI engine which is there and doesn't differentiate between a male versus a female, or between, assuming all the financial parameters were exactly the same, right? Or does it differentiate between in a marital status when 2 people apply, assuming all the financial parameters. So there should be fairness with zero bias. And then last but not the least, so much amount of information is there outside. How as a banker are you able to hold the privacy of that particular information of that consumer, right? And with the DPDP Act coming in. Now the greatness of it is we at IBM have kind of developed a platform, and recently the regulator in India also put up a circular in terms of how do you govern your multi-models in a bank, right? Are you able to go back and explain to your business and to the regulator that this is my governance model? And that's why we built on our watsonx platform the .governance, which fundamentally caters to this particular piece. So it's agnostic to any AI model or any use case. And that's the major risks which it takes care of, right? So you could have open source AI models, you could have LLMs, you could have SLMs, you could have open source meta model or a Granite of IBM or anyone Llama, but agnostic of the model, agnostic of the data sources, how are you able to go governance, right? So the governance becomes the foundational bed for you to go back and kind of allay all the risk which could come along with the AI.
Fantastic. Well, I also want to come to you, Ravinder, with how do you harness AI to ensure that you are different from what other players are doing, and any challenges you are facing on that front?
Compliance is always non-negotiable, so it has to be everything within the framework of compliance. I see this technology, AI, what we speak about, is as of now complementing and supplementing your human resources. From a customer point of view, the journey from the login till logout, what the experience the customer is having. So as of now, we have huge data, and we are trying to find out a lot of things around it. In the journey, where the client is having the best experience, where the client is facing challenges, where we can improve, where we can enhance our capabilities to give better experience to customer, these are the areas where AI can be of quite help. Definitely, if he wants to execute a transaction, the time between the order and transaction should be reduced as much as possible. So these are the areas where we are trying to have the edge over our competition, and I believe AI can be of good help in these areas.
Let's talk about how each of you are measuring that ROI. What are the metrics that you are tracking, and when do you as a CFO feel that yes, this investment was worth it and it's giving me a good bang for the buck?
Honest answer is I'm still not satisfied with the ROI which I've seen.
Venkat is never.
It is difficult to measure, especially when you're introducing new technologies on top of existing. So you need to be very clearly able to articulate what this new technology is able to deliver on top of the existing tool. We measure it based on business outcome and not what the tool has done. The tool can do whatever it is capable of doing, but at the end of the day, what is the business outcome?
But are you putting a monetary value to the business outcome?
Absolutely, because I'm paying monetary value for a license
so any data that you can share with us. Have you seen 5x returns yet?
No, not yet. Definitely not. I will be lying if I say that. Definitely not 5x. What we push for in the organization is, again, focus on execution. I think we need to be very clear that these are tools which will help you in better execution. This is not a new strategy or anything. These are tools available, technological tools to help you execute your strategy better. Whether it's better customer service, faster service, newer products, understanding customers better. So there are two streams which we are working on. One is the predictive analysis piece, and the second one is scenario planning. More so in the planning and the forecasting area, which our planning department uses. Scenario planning, what we use, again, the bedrock of all this is good data quality. Yeah. If that is incorrect, then outcomes can be. So with the assumption that data quality is clean, yeah, different scenarios are worked out, and we are trying that out for the first time now. And then we do a stress test of it, because there's no point in scenario planning without stress testing it. And then finally, are we able to have a real-time adaptation of the tool to the changing scenarios? So that's one stream which is being tried out. The other one is the predictive analysis, where you use data to do customer behavior modeling. Right. There's a huge stream of data which flows through the banks in terms of where their spends are, what is the period in the month in which they spend, and who is the beneficiary. Today you can track everything. Is it for an EMI payment? And then you find out, okay, if he is making an EMI payment, why is it that the customer is not having the mortgage loan with us? How can we then go back and understand that and offer products which will, see, today all banks are fighting for the same wallet which is there. So these insights is what I look for in terms of measuring ROI. How can we use this to get better?
I see you smiling, Vishy. Do you see this human core changing anytime soon in the next decade or so, do you think there'll be more AI and less humans interacting with customers?
I won't make that statement there itself. It's like kind of repositioning and reskilling our teams and humans, right? One is to the point what show me the ROI is obviously everything has to be quantified and measured, right? So that's very, very clear. So yes, as long as a combination of this works, I think they will kind of interlace. We can't really say that there will be some areas where you would need human touch and human intervention. That's given, and there would be some which can be done by AI or any other process automation, right? Which is lesser productive, so that we can have the human intelligence do much more productive work, right? So they will coexist somewhere.
Ravindra, I want to pick up on predictive analytics. I want to know that at HDFC Securities, how are you shaping your service delivery models for the future? What sort of trends are you watching out for? And, say over the next 5-year period, what are the AI deployments that you're looking at?
Sure. See, as of now, it is really difficult to have an equation whether we have proper ROI on AI or not, because as of now, it is not a apple-to-apple comparison. What systems we have and what systems we are, envisaging. Now, coming to AI, see what happens. We have huge data. Data is not new. Data is there with us. The usage of data, we are generating insights. With the help of AI, the time to generate the insight is reducing, and that is helping organizations to take their decisions little faster. Now, what the value we can apply to this saving in time, it is really difficult to measure as a terms of ROI. And this technology will surely help organizations not only to take decisions basis the data that is there, rather to preempt it basis the AI technology that it is having on the trend of the data. So I feel in coming years it will surely help organizations to be very fast in implementing new technologies, to adopt new services that we can offer to customers, because the changes, the time to shift from old to new is reducing with the help of these technologies.
Well, no conversation on financial institutions is complete without talking about fraud and prevention of fraud, cybersecurity, and all of this becomes a lot more complex and stressful given that we are exploring emerging technologies, and so are scamsters, and they always seem to be on top of technologies as well. So give us a sense then, what are banking and financial institutions doing to really put strong guardrails around protecting consumer wealth and consumer data? Any top 1 or 2 strategies that you're putting in place while exploring emerging technologies? Govind, if you can start.
No, I'll only say that banking has always worked on the trust, and it will always remain, because ultimately the users of the system are the same human being. 2 or 3 people could live together, they can take out money fast, and you will come to know a bit later on, somewhere when the suspicious transactions are detected or customer comes and complains, because money is there. And once you see so much money, you don't know, a person always gets tempted. So that's the biggest problem in banking, whatever technology you use. So unless your AI is so strong that any aberration or any unusual transaction, for that you have to write a very, very strong logic in the nature of branch, the kind of transaction which can happen there. For each branch you need to know whether that size of transaction can happen or not, who are doing transactions, whether the transactions maker checker is on the same system. So there are a lot of things you need to put to ensure, and there should be somebody like AI who is clearly analyzing the data to find these kind of aberrations.
So, Vishy, financial risks, fraud prevention, these are also top concerns for CFOs. Right. Give us a sense then at IBM, while you talk of responsible AI, what is it that banks and financial institutions can do with respect to technology? Any use cases that you can share where AI-powered technology has really helped in these instances?
Sure. Today, the amount of exposure external exposure of a financial institution in the market is large. And I'm talking about digital exposure, right? Largely talking about digital exposure, starting from a small handheld mobile device to a net to so on and so forth. So I like kind of call it as a different concentric circles of the Chakravyu, right? So, and every perimeter is important. It is not that if I just manage my data center core security, oh, I'm safe. No, because the entry points and the exposure is so large that the entry points to a breach or a fraud is becoming increasingly higher. So the perimeter of security is just expanding. So, and that's where we leverage a lot of our responsible AI piece in our own technologies, right? So the point is, it's not AI for security, security in AI, right? Whatever security technologies you adopt, there are a lot of things which AI can help predict well in advance, seeing a pattern of things which are moving around at every layer of a financial institution, and probably heal that as well or give insights for people to, the service providers, security administrators to act upon it, right? So that's like infusing AI in a security tool. The other side of the coin is security for AI. And I said that with multimodel, with more exposure points, right? How do you have that security layer across each one of them? Could be in the form of identity access management, could be in the form of threat management devices, could be in the form of digital trust, and so on and so forth. How do I know when I'm logging on to this mobile, it's Vishy who's logging in? It could be somebody else who could be logging on the mobile. So identity access become very, very critical. So these are some of the places where we are infusing AI in security to ensure that every perimeter of the financial institution is not breached.
All right. So as we draw this conversation to a close, I want to know from each of you, what is the next big thing that you are excited about or watching out for when you think about AI-led transformation of your banking or your financial institution? Govind, if I can start with you.
Like today we are reaching a stage where you don't see, or you will have a less of a touch. You look at banking, it's on an automated basis. You walk into branch, you don't see people. It's just like either humanoids, or you can do transaction and walk out of the branch. You need not do anything. You just either access through your biometrics or password. You do the transaction, automated teller machines, automated teller, whatever you want you do. And
So what's the future trend that you're excited about?
I think that's the future
More
in the
and more
near term.
digitalization, more and more automation.
And once the currency is out, probably then you need not do that also.
Ravindra, what about you?
I see this technology will enable in faster and wider customer services. The demands means the demands and the necessity of a customer that can be fulfilled by a platform will be enhanced in much more better ways that as of now what we are providing. I see this technology will help a lot in that.
Venkat?
AI will complement what we are doing currently. It will help us deliver the experience better, customer experience, protect the industry. It's not, in my view, it's not going to eliminate people completely or eliminate jobs. There will be reskilling which will be required. So what I'm looking forward to is how do I make sure that my team gets reskilled to be able to operate effectively in this new environment.
And Vishy, what are you looking forward to?
Looking forward to all these banks adopting the AI technologies of IBM to give that experience, right? So, but that's on a lighter note.
That's a sales pitch?
Yeah, but that is a lighter note. But I think great points from everyone, right? So, obviously, as we look at the era, and we should also look at the generation who is going to be banking for the future, right? They are the new millennials and the new Gen Zs of the world, right? Yeah. I would say the experience matters the most because the attention span is very limited, right? So in that limited time, are they getting that experience? And of course, technologies would help banks get that experience, right? So we should always fast forward instead of looking at what technologies, what are the kind of people who will be banking with these financial institutions, and what kind of genre and generation, and what is the kind of psychographics of that generation we'll be looking at, because they are they're born with technology.
Well, gentlemen, thank you so much for joining us here on the AI Dialogues today. Absolutely incredible insights from all of you. With that, it's a wrap of this special conversation. It's clear that while AI offers immense potential for enhancing efficiency, scalability, and customer experience, its successful implementation requires a careful balance of innovation and regulation, along with transparency, governance, and security. Thank you for joining us here today. Until next time, goodbye.
CNBC TV 18 presents the AI Dialogues in association with IBM.